Hi, everyone. My name is Julian DeLeonardo, and today I want to talk about a significant investment risk that often goes overlooked, especially during great markets like the ones we've had over the past 2 years: concentrated stock risk. While the stock market as a whole tends to trend upwards over time, individual stocks don't always follow that path. In fact, there's a boom or bust nature to many single stocks, and this can pose a serious risk to investors and their long-term financial goals. As you can see, from 1987 to 2023, over two-thirds of stocks in the Russell 3000 index underperformed the index. Surprisingly, about one-third of these stocks actually lost money over time. So this illustrates a critical point. Relying heavily on one or just a few stocks can be a gamble. While some stocks soar, think of stocks that have gained over 3,000%. Many others underperform or even fail entirely. One common reason investors avoid diversifying is the fear of the big tax bill when selling stocks to diversify. However, many solutions exist to help reduce the risk of concentrated positions without immediately triggering a high tax burden. For example, direct indexing or tax loss harvesting other positions to offset some of the gains. Let's discuss the concept of lottery-like returns. A small number of stocks outperform the market, grabbing headlines. You see it on CNBC or in the Wall Street Journal. But often these high flyers can't sustain their growth. So the past 36 years show us that 42% of stocks dropped by at least 50% and never recovered. Big names like Sears, Yahoo, GE have all had tumultuous times in the past. Concentrated positions can feel like winning the lottery if the stock performs well. But as we've seen, the risk of losing value is also very real. I've had many friends come up to me in the past with their next hot stock pick, wanting my opinion on it. And my consistent question is, what if you're wrong? Does that put you and your family at risk? While diversifying may feel like giving up the chance for massive gains, it's one of the most effective ways to protect your wealth long term. Thank you for tuning in. And as always, reach out if you'd like to discuss how to manage concentrated stock risks or have any additional questions for me.